Hey guys, Tony here. So I wanted to do a video and show you all the stats on the new NBG version, the modified version that we're going to be using moving forward. Okay, I want you to understand how it works and mainly the differences between the current NBG and this modified version, which makes it well, they won't give me all the secret sauce ingredients, if you will, but from what I understand and from what everything that they have told me, I'm going to give you, full transparency, guys. That's why I'm doing this video. You know, I want full transparency, and I can't. You can see this is a MyFX book. I'm not allowed to give out the MyFX book link to this because for one, this is like a corporate account that they used for testing, and then the other one, the live account I'm going to show you, it's an actual customer of theirs. You know, just like we're a customer, it's another customer of theirs that started trading it live, and they gave permission for us to be able to view it to see the stats. So you know, for that reason, I can't just turn around and give you guys the link because you know, it's their account, you know, for privacy reasons. So the next best thing is for me to do a video showing you a live feed on the account, and I'm just simply blurring out, you know, their information, their link and so forth, so you can see everything else. Okay, guys, now let's get started here. Now, if you remember, a couple weeks ago when I started, when I talked about this, this version, actually it was only about a week ago, I was telling you that they ran it on demo for 32 days. This is the account right here, okay? Now this was a demo account, but what I want to stress is this is not back testing. Okay, there's a big difference between back testing and forward testing. I'll tell you from experience. I've ran EAs that had 16 plus years of back testing, never blew an account, and then we use it, and within 3 months we blow the account. You know, what are the chances of that? You know, and there's different reasons for that. One, it's using history, and the market's just always changing. And two, companies can actually program it for the back testing to read the data prior to the software doing its thing. In other words, it'll adapt to make sure that it comes out ahead and makes money, where in real life that wouldn't happen. So backtesting is not, just for future reference for you guys, backtesting is not always credible. Now, if you're doing your own backtesting, you know, maybe you have your own strategy you want to backtest, then yeah, of course you're not going to do that because it's not in your best interest to cheat it, right? Because you're not trying to sell it. But when they're trying to sell it, you know, you have to be careful. There's a lot of sneaky individuals and companies out there that'll make the back testing look perfect. Like this company, for instance, they do back testing, but they won't show it to me. They refuse to show it to me. They're like, it's pointless. They're like, we don't want to show you something that could be manipulated. Forward testing is the only way to go. So just for an example, anytime you're doing a system or, you know, seeing if a system works in EA or what have you, you always want to back test. Because if it doesn't pass the back test, then guess what? It's worthless. It's definitely not going to do anything moving, you know, in forward testing. However, if it passes the back test, that does not give you a guarantee that it'll work forward test. It's just kind of like one of the steps that you need to do. Forward testing is where it's at. This here, that what you're looking at, is a $5,000 account that they ran for 32 days. You can see July 2nd to August 6th. So a month and 4 days. So just under 5 weeks, about 4.5 weeks. Okay, and you could see here it did. This is crazy, guys. 1,655%. That's 16.5 to 1 on your money. So if you would have put in $1,000, you turn it into 16,500. You could see here their $5,000 turned into $87,772 in just over a month. Now, here's some key numbers. The drawdown, it hit a 44% drawdown, which is actually, I mean, when you consider the returns on this, that's amazing. It's truly amazing. It's crazy enough that it didn't blow the account, but to stay under 50%, because that's really the danger zone there. When you get to 50%, it doesn't take much more for the entire account to blow, okay? But the fact that it stayed under 50%, and here's the kicker. When they ran this was a stress test. They were like basically throwing everything at it. They ran it through all the high impact news and everything, meaning they did not turn this thing off for high impact news, which is why it hit the high drawdown. In fact, drawdown, let's see. Click on drawdown, you'll see right here, right in the very beginning is when it hit that 40-some%. And then over here, one other time it hit 35%. That's it. That's amazing, guys. So, and this is because they ran it through red folder news. This one I know for a fact, because they told me, was running it through the news. It was a news event, a high red folder impact news, that caused the market to move against them and hit this drawdown. This one I'm not sure about. I don't want to tell you something that I'm not 100% on. But this one I know for a fact. They told me this would not have happened had they not run it through the news. Okay, and the reason I mention that is because we're not going to run this on the news. Okay, again, I want to stress, this was for testing purposes. This was, here's another nice thing. This was using, look at the broker, LQDFX, our broker. Okay, so that's an excellent sign. They were using the same broker as us, which means same spread, same commit, same, pretty much same everything. Okay, so it's truly, apples to apples. It gets better in the other account I'm going to show you. But okay, so just to give you those numbers, now you look over here. Here's the win percentage. The trades, it did 1,289 trades. So basically, it does a lot more trading than the current NBG. Approximately 100 trades a day. Well, actually, this shows a little less than 100 trades a day because there's what 20 or 22. Hang on, guys. I'm going to do it real fast. The math, 1289 divided by about 22 trading days. This shows about just under 60 trades a day. However, the live account they're running now is showing around 100 trades a day. But the bottom line is it does a lot more trades, and the results, the results speak for themselves. Okay, now this hasn't been running this week. You see, they turned it off last week because they started running a new account this week. I don't think there's any more stats to really show here. Okay, yeah, no. 688% in July, and then 120. I mean, you guys, that's just absolutely crazy, right? I mean, if you put in $1,000, think that you can turn it into 16,000. Now, again, you won't get these exact results because we're not running it through, this had high drawdown, but it probably came out, if we look on that day, this was the July 6th, 7th, July 6th, it went from, see, it had quite a bit of growth when it got out of that drawdown. So it's kind of like, it went into high drawdown, but it paid off in the end. But the bottom line is we don't want to take that risk. It's not, the risk to reward is not there. So we're staying out of all high impact news, okay? Another thing is if we're way up for the week, and some high impact news is coming up, and maybe we're in like a 10% drawdown, we may actually close out that 10% and take that 10% loss because maybe we're up already 70, 80% or 100% for the week. We'll just close it out. That way we can stay out of the in the news and be free and clear with some major profits. Another thing we may do is say we're going into news and we can't, we're in drawdown, we're stuck in drawdown. So we have no choice but to ride it out with the news, and maybe we're in, say, a 20% drawdown. What they'll do is they'll put a stop loss at like 25%. So that way it'll go through the news, and if the news goes in our favor, it'll get us out of that drawdown and bring us into profit. But worst case scenario, if it goes against us, we'll only lose another 5%. It closes all trades. We take a little hit, 25% hit. No big deal. We make that in a day, okay? I mean, which is just absolutely insane. Okay, guys, I'm going to show you a live account now. This account started this week. It's only been going for 4 days. Here's the beauty of this. It's again, it's a live account, which means real money. It's a PAM account, which is what we have, which means the spreads are the same. In fact, they don't even have the same leverage. We have higher leverage. We have an agreement with our broker. They give us 1 to 300 leverage. This is only 1 to 200. It doesn't make a difference until you get into some drawdown. So, but it's bottom line is everything else is identical. So the results, literally, guys, the results would be the exact same results had this been on our PAM account this week. Okay, it's with our broker, it's a PAM account, and it's live money. Now they started off with, look at this is crazy. So they started off with $10,000. They turned it into $18,000 in 2 days, 2.5 days. Okay, you could see here. Okay, so let me just show you. Okay, guys, this is in 4 days. See, it didn't even trade all 5 days. It didn't trade on the 9th. So 10, 11, 12, 13. So Tuesday, Wednesday, Thursday, Friday. 4 days. That's it, guys. Okay, I want to stress that. Not even a full week. 127.1%. Okay, so that means if you put in $1,000, you'd have $2,270 in 4 days. Now listen, guys, I want to stress past results don't guarantee future results. Obviously, anything can happen. This is a small sample, but that's also why I showed you the previous one that they ran for a full, 4.5 weeks. So they didn't just throw this thing on here and say, okay, let's see what happens. So this is real money. It's a small PAM account with another client of theirs. Now, they ended up after a couple of days dumping in a lot more money. That's why I was telling you they did start it off with only 10,000. They ran it to 18,000, and once they got to people had 80% return on their money, they started adding more funds. You could see the balance right now is $64,000. But that's why the balance doesn't say $100,000 or whatever, because they started the first 2.5 days at only 10,000. Ran it up to 18,000, then added more deposits I think it's only gotten 1 day since they added that deposit. One or 1.5 days of returns since they added that deposit. Otherwise, had they started with 45,000, you figure 127%, that would be, it'd be over $100,000. It'd be over $100,000 on that 45K. Okay, now you guys, let me show you some numbers here. See, this is what I want to show you. So, okay, in 4 days, it has 419 trades. That's exactly 100 trades a day, give or take a couple. So it's averaging around 100 trades a day. It may turn out to be less overall because, as you saw, the previous one that they ran for a month didn't have as many. It depends on the market. Okay, it depends on the market. Now, keep in mind, again, we're staying out of high impact news. If we are going into impact news and we have no choice, we're going to have a tight stop loss on it to cut it if it goes against us. Okay, these are very important things to bring up because I want to stress this is high risk, guys. How do you get these kind of returns without taking on high risk? Okay, I also want to stress this is it's a version of the NBG we're running now, but it has a lot of different parameters to it. That it trades a lot differently than the current one, which, look at the results speak for themselves. In fact, when we got into drawdown with our current one, this one was out of drawdown and completely out of trades and done for the day and had made 20-some%. Look at this daily, guys. 22.76% per day. That's the average. That's what it's averaged per day so far in 4 days. And if you compound that, that's 127 point. I even did the math on my calculator just to make sure. That amounts to 127%. So when you get this kind of a return on your money, and you're compounding it, not on a weekly or monthly, but on a daily basis, you look at that. It took 3 days to double, in 4 days, 127%. So the risk to reward is truly amazing with this. Now here's the kicker. Here's where it says only 6% today. Maybe it cut off with the time or something like that. Or it's possible maybe it did yesterday. It did a lot more percentage wise. And then look. Oh, and here's what. Sorry guys, this is what I want to show you. It's not showing the drawdown. But there was only 1 day, I'm going to tell you right now because I've been following it every day. Here's the highest drawdown this week. Now, guys, it's going to go a lot higher than this. There's going to be times where this hits 50%. There's going to be times where this account would blow, where if we stayed in the trades, it'll blow. It's just going to happen. With these kind of returns, it's going to happen. But that's why we're going to have, I'll explain in a second what we're going to do. But okay, so you'll see right here the drawdowns, 22.26%. That's the highest drawdown it hit in 4 days to get this kind of return absolutely ridiculous. And it was actually 4.4%. I think it was 4 point something percent drawdown up until yesterday. So the first 2 days it was the highest drawdown was 4%. Yesterday was 22%. And I don't know what it was today, but it was obviously under 22% because this here is the highest drawdown. So that was 2 days ago. So to double your money, more than double your money with a 22% drawdown is amazing. Okay? I mean, just absolutely ridiculous. And here you can see so far for the month of August, 127. This is 4 days though. 4 days, guys. Now, here's what we're going to do. This is where we're going to make this thing just an unstoppable force, long term, okay? Because what good is it getting these returns if we can blow an account? Well, as you know, we have an equity protection on the NBG account right now. We're going to have the same thing on this one, okay? Right now it's at 50%, which means no matter how bad the market goes against us, if we are in 50% drawdown, meaning you're down 50% on your account, it closes all trades, gets out of the trades, and stops trading for the day, okay? We're doing the same thing here. Now, I don't know. I don't know the exact numbers because it really depends on when we were to hit the drawdown, beginning of the week, later in the week, and stuff like that. But even if this 22% was 50%, say it hit 50% once this week, okay, we'd still be even for the week. We would still be even for the week because the other 3 days, it did over 100%. So when you lose 50%, you need to make 100%, right? Because you lose half your money and you have to double your money. In order to double your money, that's 100% return in profits to get back to where you were. So what we're going to do is as we get more data, we're going to find the sweet spot. The sweet spot meaning the perfect percentage equity protection wise to pull the plug on the trades, where if we hit that certain percent, we get out of the trades, we take the loss, and then we recover. Now here's the thing. If we do 50%, and 50% might turn out to be the best thing, because if this thing can run, look at over in the other one, it went a whole month, and we even ran it through the news, and it never hit 50%. Okay, so if this thing runs for 30 days straight and we never hit 50%, but we hit 35, 40% a couple times, we may leave it at 50% because we could recover in 3 or 4 days. And let's just say a week. Let's say a week. We could recover losing half your account. We could double it in a week and be back to where you were, and then boom, boom, boom. It's just all profit from that point on. Okay. Another thing we can do is start off with 50%. We double everybody's money, and then we pull it back down a little bit. That way, if we do take a hit, we're not taking all the profit back. These are things we're going to figure out when we do our analysis after every 30 days. We might find that the sweet spot is 30%. Okay, so now that wouldn't had we made it 20% this week, that's what I was going to say earlier. Had we made it 20%, we would have hit it one day this week. We would have lost 20%. When you lose 20%, you only need 25% to fully recover. We make that in a day. We make that in a day. So even though we closed all trades, took a 22% hit, the very next day we got all our money back, and the other 2 days of the week are pure profit. So we're up 50%, 60% for the week, even though we hit equity protection. We may decide to make it 30%. This week, had we made it 30%, we would have never hit it, and we would have clocked 127% profit on our money. We would have never hit that equity protection. Okay, so as it looks right now, the perfect number might be around 30%. But as the weeks go by, we will adjust it, and we're just going to get that sweet spot to get the maximum profit with the minimum, where it's not hitting the equity protection, where it hits it the least amount of times and gets the maximum profit. Because if you have a higher equity protection, it's going to hit it less times, but it takes longer to recover. Where we could do a 10%, guys. It stayed under 10% every day this week except for one day. And we would have taken a 10% hit, and you only need 12% to get it back. The very next day, we would have gotten it back times 2. we'd still be over 100% for the week. Okay, so that's where as the time goes by, this is going to get better and better and better. But we have the profit margin is so high on this that it's not a matter of can we make money on this. Okay, it's just a matter of tweaking it to make the most, to get the most bang for our buck, so that we can run this thing. I mean, with the exception of running it through, we're not going to run it on high impact news, which will keep us out of most high drawdown situations. We want to get this thing where we could just keep running it. So that way you just keep running on the PAM account. If new people are coming in, doesn't matter. Even if you take a hit your very first day, boom, you get recovered in a day, a couple days time, and then pure profit from there. Okay. Now I don't want you guys expecting, I'm going to tell you this right now, I don't want you guys expecting, oh, okay, great, man, I'm going to get 15 to 1 on my money every month. I'm going to put in, $500, or let's just say $1,000 turn into 15 grand, and the next month that would be 100 grand in 2 months off $1,000. That's ridiculous, right? Don't expect that. Is it possible? Well, yeah. With the data we have, it is absolutely possible. It would have happened, in fact, had you done that a month ago. Okay, but it would be on the way to getting there. Let's put it that way. Your 15,000 would have turned into 17,000, 18,000. You'd be at about 20-some thousand dollars right now in 5 weeks. That's crazy, okay? I don't want you to expect that. If we can double our money, again, past profits don't guarantee future results, and this is being pretty darn conservative from what we've seen so far, but if we can double our money, like say every 2 weeks, that would be 400%, and that's 4 to 1 in a month. Now, you guys do the math, go get a compound calculator and figure $1,000. Okay, in 1 month you're at 4,000. Next month you're at 16,000. Next month you're at $48,000 in 3 months. That's doubling it every couple weeks. I'm thinking that long term that may be more realistic, maybe even a little bit less than that. But just look at what we're dealing with here, guys. Look at what we have to work with here and how amazing this thing is. And one of the things that makes this thing so different than the original one, it gets out of trades because every time it puts in a new trade, when it does its cost averaging, it adjusts the price and the lot size accordingly to make it to where it can get out of the trade a lot faster. So it'll increase the lot size a little bit, and no, it's not a crazy martingale or anything like that for you guys, experienced people out there. It is not a big martingale. In fact, these guys are like me. They absolutely despise martingales. Okay, it's like a very small modified cost averaging where it'll increase the lot size a little bit, which is just that little bit extra needed to get it out of trades quicker, a lot quicker than just doing a flat lot size, which is what the normal NBG does. It does the same lot size all the time. And that's why when we get into drawdown, sometimes it takes a lot longer to get out of that drawdown. Where with this, it gets out quicker. It gets out before there's even any real danger most of the time. If it's going against us, it just gets a little pullback, and it's just enough to get this thing out and snag some good profits and then sits back. Another thing that they found out running this is it would do 3 sessions, like 3 cycles of trades. It'd get in a set of trades, it'd make money, and then if it sees another opportunity, it'd get in the second set of trades and make money. If it sees a third set of trades, that would be when it gets into drawdown most of the time. So they're eliminating that third cycle, that third session, if you will, in a 24-hour period. So that eliminates some high drawdown and staying in drawdown as well. Because I believe with the other version I showed you, the 5,000 to 87K, I believe they ran it on all the sessions. Like I said, they were given it a stress test, big time, to see what it can handle. So they're doing a lot of things differently moving forward with this. As far as our equity protection to start, you guys, I'm not 100%. I'm going to be doing a bunch of analysis over the weekend on these 2 MyFX books along with the developers, and we're going to figure out if we should do a 50% or 30%, 40%, what have you. It's most likely going to be either 30 or 50%. Just know that the lower we make it, the more often we're going to take those losses. But when we're making this on a daily basis, I mean, we had a day this week where we did 30% or 28, just under 30% in one day. It's irrelevant if we take a 30% hit. Okay, I think at 30%, we need a 42% profit to fully recover, which is basically less than 2 days. Yeah, it's less than 2 days with compounding. So if we make it 30%, we take a hit. 2 days later, on average, obviously it's not like it's not impossible to take a hit 2 days in a row. I mean, I'm just going by the law of averages and what it's shown us thus far. We would recover in a day and a half and be right back into profit. Most likely wouldn't have it happen again the rest of the week because we're staying out of the high impact news. Okay. Next week, I don't think there's any high impact news, which is great to get started with this thing. So, okay, I'm kind of rambling on, guys, but I want you to understand, I want you to see everything that I'm seeing. I mean, they give me some more info when I have the conference calls with them and stuff. But as far as the data, I want you to see this data firsthand. I don't know why it's not showing the drawdown. But anyways, I already told you that was just one day. It was 4%. It was 4% or less 3 out of the 4 days. And then yesterday, not today, but yesterday, it hit 22%. In fact, I should mention, today we hit high drawdown. If you're in our NBG account, we hit high drawdown today. We hit the equity protection to save our butts. Okay, this thing is under 22%. It might have been 19%, I don't know, but it was under 22% because the 22% was from Wednesday. So that goes to show you right there. It gets in and out of the trade. It gets out of the trades quicker, closes it all out, and waits for the next opportunity. Okay, so this thing, you guys, is just going to get better and better as we get more data. And like I said, find that sweet spot. Maybe we can, go from, maybe we're averaging 300% in a month, and we can tweak this thing to spit out 700 or 800% by just finding the proper percentage of equity protection to close the trades. We're going to do it. We're going to do it. That's what the whole aim is. But the thing is, we have enough right now to start this thing, crank it up, and just go to town. Okay. Anybody that had money in this account more than doubled their account this week. Okay. And again, you guys, the beauty of this is with the same broker. It's with a PAM account, which is what we have, and it's live. It's a live account. So I mean, it's just apples to apples. Again, had we had this on Tuesday, and you guys, you can be mad at me if you want to. I'm the one that said to wait until next week, and that's because I wanted to give people time to fund their accounts and stuff like that. We could have started this thing on Wednesday, because we had our meeting on Tuesday. We could have started on Wednesday, but I said, you know what? Let's just wait till the end of the week. Start it next week to give people time. So had we jumped on board, yeah, we probably would have been up about 50. I hate to say it, but like 50 or 60%. Maybe about 45, 50%, because it doesn't look like it did as good today as these 2 days. So, but pretty amazing stuff, guys. So this is completely, it's the same EA, but completely different parameters as far as it does a lot more trades, and it gets out of the drawdown quicker. With the little pullbacks, it's literally night and day, and it's night and day from the current version that we're using. And the current version we're using, we're taking on that risk, but the returns are, a small fraction of this, and it's still profitable. The thing's done amazing in the past 8 months. Today is the first time that it actually hit that 50% drawdown mark in 8 months. Okay. When we had the crash last week, that was with a completely different EA. It was a scalping EA. It was not the normal NBG. So today was literally the first day in 8 months. So I mean that's amazing in itself, because I don't know what it's generated, like 5,000 or 6,000% this year. We haven't had it that we've only had it for a couple months, but had we had it from the beginning, I'm saying. But this thing's just on steroids, guys. This is like, I'm still in awe. I'm actually hoping that we don't have an issue with the broker, with the returns. if we start flipping accounts like crazy, and then, you know, of course, people are putting more money in and this and that, and we go from, you know, 20 grand to 500,000 in a couple months, we might have to start looking at other brokers, you know, and we'll do what we have to do. We're always going to stay ahead. Okay, guys, I'm rambling here, and this is hitting exactly the 30-minute mark. I did not want to make it this long, but I wanted to show you full transparency, what the new NBG EA looks like, what it's capable of. Yeah, and what we're going to, you know, what we're going to be running here moving forward. Now, remember, the minimum, at least at the time of this recording, we reduced the minimum to $250. It used to be $500, now it's $250. So you can put in as little as $250. If you already have an account and it's below $250, you know, because of the loss earlier, it's okay. It'll still trade you. Okay, it'll still trade you. You don't have to put more money in, guys. If you want to just, you know, see how it goes for a while, that's fine. That's completely fine. No pressure at all. Sit back on the sidelines and watch and see, you know, if and when you want to jump on the train. Okay, guys? All right, that's it for this video. Hopefully I explained everything thoroughly. Of course, as always, get back to me with any questions that you have. I'll be happy to answer them. And I'm going to be posting this very shortly after I do the live update. I'm doing that next. Then I'm going to post this afterwards so you guys can watch this. Okay, guys, take care. Have a great weekend. It's Friday, and happy trading.